Great. So I think we've got everyone now, and it's just after 6, so we'll make a start. Um, so welcome today to today's panel discussion on the topic of tips and insights on careers and investing. My name is Shivani Oberoi, and I'll be moderating today's discussion alongside Jagtar. So we typically give these talks in person at schools and universities, but we're very happy to have been able to continue our program online. So we did our first virtual talk 2 weeks ago, which was very successful, and we're excited to have so many of you on the line for this one as well. And I wanted to say a huge thanks to CapitOx, who we are partnering with on this event. So thank you very much. Some of you may be familiar with GAIN as an organization, and some of you may not. So I'll just give you a very brief background to GAIN and myself before introducing our very talented lineup of panelists for today. So as mentioned, my name is Shivani, and I'm an investment manager at Oxford University Endowment Management. So I work as part of a small investment team investing the charitable assets of Oxford University, which many of you go to, I think, and many of the colleges and associated trusts of the university as well. And that's for the goal of funding the university's long-term research and education aims. And I joined the GAIN team in December last year with the role of leading outreach initiatives in Oxford. So just quick background to GAIN. GAIN stands for Girls Are Investors, and it's a community that aims to encourage more women to apply for entry-level roles by informing and inspiring and shining a spotlight on female role models. I personally think investing is one of the most interesting and rewarding career opportunities out there, and I hope after today's talk you all have got a flavor for why. So I'm very excited for today's discussion because we have 3 incredibly talented and interesting women on the line. So I'll just quickly introduce them before handing over to them to talk about their backgrounds and the kinds of investments they make. So first out, we have Sheena Willis, who is a vice president in the European private equity team at Bain Capital, which is a multi-asset alternative investment firm. Then we also have Yvonne Bajela, who's a founding member and principal at ImpactX Capital, and that's a UK-based venture capital firm investing in underrepresented entrepreneurs. And finally, we have Adiba Igodara, a partner at Actis in New York, where she is head of strategic relationships. And Actis is a global emerging markets investment firm, and Adiba recently established the Actis Female Network as well. So we wanted to make this discussion as interactive as possible, and we'll make sure we incorporate your questions into the discussion. So please post your questions in the chat forum. We'll have about 45 minutes of panelist discussion, followed by about 45 minutes for Q&A. Jagtar, I don't know if you wanted to say anything before we kick off.
Yeah, so essentially this is our first event of the term. We're very excited to be to launching it with GAIN. I know a lot of you will be people that are not sure about your careers and not sure about investment management, whether it's for you. So essentially this event's a chance for you guys to ask questions and really learn if this is the right career for you. We've got members on the CapitOx committee that are going into investment management, so it's a very attractive career for a lot of people. So please make use of the guests here that are here for your time.
Great. So before we get deep into the topic of investment management, I thought it would be helpful if you all just kicked off a little bit of background. So Sheena, if you could introduce yourself and your background and the sorts of investments that you make at Bain, that would be great.
Sure, happy to. So I work on the European, as you say, team at Bain Capital, mostly investing in consumers. So we do, typically our minimum check size would be 150 million in equity, and we go up from there. Investments that you might know that I spend time on. I spend a lot of my time on a business called Bugaboo, which does baby strollers, and a lot of the time also on a New York business in beauty. So that's how I spend my time day to day. Before I joined Bain Cap, I did an MBA at INSEAD in Singapore, and before that I was at BCG in London.
Fantastic. Thank you very much. And Yvonne, would you be able to give us your background and a flavor of what you do and the kinds of entrepreneurs that you guys look to back?
Yeah, sure. So I work at ImpactX, which is a UK-based venture capital fund. So we invest at the very early stages of companies. Typically, it may be their second round of incoming funding coming into the business. So that's investment rounds anywhere from, say, 500K to 3 million is what we typically invest in. And in terms of the companies, majority of companies that we look at are technology companies, software companies. A company that you may be familiar with that I've invested in is TransferWise. And we're quite hands-on when we invest. So we help the company with various aspects, whether it's recruitment, whether it's, you know, helping them with sales. We try to help as much as possible, really.
Great. And then finally, Adiba, would you mind introducing yourself and your role?
Yeah, no, thanks. So I'm a partner with Actis, which is probably the longest standing private investment firm into the emerging markets. So we invest across a range of sectors, consumer, financial services, education, healthcare, power, building power generation businesses, real estate, both development and operating real estate, and a number of financial services I mentioned, in particular technology-backed financial services. So across a number of sectors, across Africa, all of Africa, Asia, both South Asia and Southeast Asia, including China, and in Latin America. And my role has gone through a number of different phases of both the firm and where we are today. We started off as a development finance institution, so I was on the investment side. And when we spun out and established Actis as a private firm, a private equity firm, I moved to fundraising, to the fundraising side. So today, I've been very focused on establishing, we've raised $15 billion over the time, and really managing those relationships and establishing a subset of a smaller number of strategic relationships with our investors. And I think perhaps when we come on to describing the different aspects of investment management and where alternative investments and private equity and real estate, where they all fit in, I think it'll be important, and I've spent some time describing the different aspects, because I think it's really important and exciting to me for folk to understand that there's a very broad range of interests and skill sets that can lend themselves to coming into this world of investment management. So, you know, as you're sitting there, whether you're a computer scientist or a finance and economics person, or if you're looking to go into the operational side, consumer sector, there's a very broad range of ways in which you can still end up in this sector, which I think all of us sitting here would agree is very relevant and will always be relevant, irrespective of what's going on in the macro, in macroeconomic performance.
Thank you. That's an extremely helpful introduction and background to each of you. And I think that leads in nicely to our first area of discussion, where we're going to be talking about each of the panelists' experiences and backgrounds and how they got into investment as a career in more detail. So just to kick off, Yvonne, would you mind telling us a bit about what you studied at university and what your route into investment management was?
Yeah, sure. So I actually studied economics and finance at university. I wasn't quite clear of the path into investment management at the time, but I knew that I wanted to go into the world of finance. And so that's where I started off. So really started off at Goldman Sachs. And that's where I had my first exposure to working alongside companies. And I came to know about, on the other end of transaction, private equity firms and venture capital firms. And I really wanted just to learn more. From that, I realized that I wanted to delve deeper into the world of working with companies. So I ended up working in strategy consulting for a short period of time before joining a corporate VC firm, corporate venture capital fund called Mitsui. So that's a Japanese investment company. And so that was really my entry into the world of investment management. But it wasn't a very straight path. And so I guess the point that I'm trying to make here is where you start off is not necessarily where you finish. And I made several career moves before I actually realized what I wanted to do and where I wanted to focus. And it was really that love for entrepreneurship which led me to find myself in the world of investment and management.
Yeah, Shauna, same question to yourself. You didn't start off in investment management, so how did you sort of end up there, so to speak?
To me?
Yeah, yeah.
So yeah, interesting. I studied history and politics, and then after I graduated, I was a teacher for a year in Spain, and through sheer coincidence and somebody suggesting it to me, I ended up applying to BCG, probably with a lot less knowledge of what that really was and what it meant than maybe some other people I joined with. And so kind of serendipitously, after joining BCG, my first project that I worked on was in the private equity team. So working as an advisor to private equity funds, and I really liked it, right? So it stuck, and I spent best part of 2 years working in the private equity team as an advisor. And from there had this idea that maybe private equity would be the right place for me, but I was a bit unsure because, you know, it's a very opaque industry and it's hard to understand if you're on the outside. And so I took a year out to do an MBA to kind of take some time to think and kind of work through whether that was the right move for me or not. And ultimately decided that BCG would probably give me my job back if I decided that I hated private equity and decided to make the jump. And that's what took me over to Bain Capital. But I would say that kind of similarly to Yvonne, I had no idea what the industry was when I graduated from university. And, you know, it took a fair bit of luck and a couple of different steps to get me to the job that I do today.
Thanks. That's a really interesting and a different route in. So great to hear your perspective on that. And Adiba, same question to you. How did you get into the industry, and how did you get your first job in investment?
Well, I started life as a lawyer, as a barrister, actually, to be specific, and then I moved from the UK to Nigeria to work, and there the law profession is fused. And so I started spending a lot of time advising multinational companies on some of their M&A strategy, helping them navigate investing into Africa, navigate around exchange control regulation that existed at the time. And that really sort of opened my eyes to the world of investment, to the world of building companies, and the excitement of doing it in markets where, quite frankly, there was very little competition. There was very little capital coming in to compete. And so that led me to working with CDC, which is an organization 100% owned by the British government. It's a development finance institution. And I spent a number of years there investing across a whole range of sectors. And because the focus was development, there was a focus on not only financial returns, but importantly, impact as well, and the impact of the investment on economic development and growth. And then in 2004, there was a group of us as a management team spun out of CDC, and so established Actis. And we went there, we needed then, up until then, we'd been managing capital just for the British government, but we then needed to go out and raise capital from other institutional investors. And it was important to us because those emerging markets was not very well known in those days. I mean, I was still having conversations with people who would talk about Africa as one country. And so it was important to us to have people who had been on the investing side actually engage in the conversations with the institutional investors and be able to speak with that experience of having been an investor, having understood how to manage and mitigate risk, and therefore raise capital from them. But I do think, and that's what led me onto the fundraising side, but I do think it might be helpful, and you tell me, just to take a step back for a moment, because I look around the table and I think we're all very focused on private equity, VC, which I think it's important to say is just one aspect of this broad umbrella of investment management. And even till today, there are people who get a little bit confused, even within my people I speak to, as to, well, are the banks in investment management, what are the other aspects of it? And I think it's important to say that, the broad activity of managing assets, of managing portfolios of investments, either for an individual as a client, very wealthy individuals, or as institutions, for institutions as clients who are typically pension funds and family offices and other institutions. It includes or encompasses sitting within one of the banks that has an investment solutions, whether it's a Morgan Stanley wealth management, investment management, and devising or coming up with a range of strategies that can include investing in liquid, shorter term, listed equities, hedge funds, alternative investments, private equity, investing in real estate. It can, the whole activity or umbrella of investment management covers a very broad range of activities. And we are speaking about that longer term, effectively equity capital investing when we're talking about private equity and VC.
Thank you, Adiba. Yeah, that goes to show how diverse investment management is, how many different things that you can do within the industry. So a question that I've had just from looking through the attendee list is that not everyone on the attendee list comes from a quantitative background, and neither do you guys. So what do you think? Do you think having a quantitative background is essential to being a good investor? How much do you think that impacts? So I'll open it up to Shauna first, if you'd like to answer.
Sure. So I think the thing that I love about private equity, and it's hard to say it without sounding a bit arrogant, but it's an industry that really requires, and again, to the point made, look, private equity is a very narrow, tiny slither of what investment management is overall. So I'm speaking from obviously the part of the business that I kind of work in and understand. But if you were going to answer this from a quant hedge fund perspective, it would be very different, just as a caveat. I think the cool thing about private equity is it's at its heart, it's a people business. You also have to be analytical in that you both qualitatively and quantitatively need to be able to assess information in a structured way. But what I would say about quantitative is, look, I mean, if you can do primary school, and I'm not trying to be dismissive, but if you can do primary school mathematics solidly, you're going to have covered off 95% of what goes on, right? I think it's not magic that's being done from a quantitative perspective. What you need to be good at the job is really understanding what those numbers mean. And so it's not necessarily a job only for, quantum physicists, but it's definitely a job for people who are able to be highly numerate and understand what those numbers mean in a broader commercial and strategic context. And, candidly tie that in with, EQ and being able to speak to people, build trust, build relationships, because ultimately, at least the type of investing that I do, that's really at the heart of what makes a difference between success and failure.
Yeah, that makes a lot of sense. And I would definitely agree from my own experience, very, very similar as well. So Yvonne, would be interested to hear from your perspective, given that you had a more, the financial and economics background, would be interested to hear what you think about the quantitative versus qualitative skills required for your current role, and what the most important skills that you're utilizing are when you're engaging with entrepreneurs and companies.
Yeah, so I totally agree with Sheena that, the analytical skills and the ability to work with numbers is absolutely key, but they can be learned. I mean, I have friends that have come from marketing backgrounds that have entered the world of venture capital. I think ultimately you do need to have curiosity, you need to have a really keen interest in entrepreneurship, and great communication skills. So, the VC industry is notoriously network driven. And that's a skill that's highly valued, as well as the ability to analyze and follow trends and really just evaluate market analysis and so on. So the analytical piece is just one aspect of skills that's required. And as I mentioned, I have friends that have come from less analytical backgrounds, have managed to break into the world of VC, and they're great investors. So that's definitely a skill that can be acquired over time.
Great. Let's switch gears and talk more about, because I know a number of you might not fully understand what investment management is. So who best to ask some of these three people here? So let's start off with Adiba. What does your day-to-day sort of role within an investment management firm look like? What do you do on a day-to-day basis?
So Jagtar, I'm possibly not the best person to start with, because I'm at a different stage of my career where I could talk about what the day-to-day of a private equity, of one of the guy on the investing side, but maybe I'll just describe it in this way. What I would within the private equity world, there are, I'd probably say, four main areas where the day-to-day is quite different. And going back to the point of whether you need to be numerate or not, I do think you need to be numerate, by the way, and I think it's helpful to have some quantitative training. Now, whether you get that outside of the firm or within the firm, if you certainly start at the junior level within a PE firm, you will spend your first few years just doing financial modeling, and you'll either be able to do that or you won't. So you can be on the day-to-day for somebody on a deal team is, depending on their level, is looking at doing the financial modeling, looking at whether an investment opportunity is attractive, analyzing its performance, analyzing its financial performance, so being able to understand financial statements, and importantly, spending time with the management team, both to assess their competence, but also their values and whether your interests are aligned. Now, that's if you're on the investment deal doing side. If you're on the fundraising side, again, within a fundraising team, you tend to have this split between those who sit on what you might call the investor relations side, so where you're focused on reporting on the performance of the portfolio, of understanding how performance and the trends from month to month, quarter to quarter, where you will spend time in advance of a fundraise preparing data or materials that investors, institutions will carry out due diligence on. And so even there, you need an ability, well, importantly, you need an ability, you need to be able to understand numbers, and you need to be able to use those to translate, to actually put across, pull in the communication skill sets and actually communicate the performance and trajectory of a portfolio. That's on one side of fundraising. On the other side, which is the side that I've been up until the last year, was very, very focused on, I would say you spend a lot of your time on an airplane. You are going, you are on road shows, you are meeting with investors, both existing investors and target prospective investors. You have to have communication skills to describe the investment opportunities, the markets where you invest. You need number skills to be able to describe the performance and track record of the business as you look to raise capital from investors. So a broad set of different sets of activities depending on which side of the business you sit on.
Thank you. That's a very helpful overview. And to go into a little bit more kind of detail in a specific area, Yvonne, I wonder if you would be able to describe a day in the life of your job. And you touched at the start about the kinds of opportunities and investments that you look at, but if you could go into a little bit more detail on that, that would be great.
Yeah, so I guess on our side, as with most VCs, we have quite a small firm. So there's only 5 of us working across all areas from deal sourcing, execution to post-investment activity. And so I find myself, doing all three tasks. And no real day is typical, should I say. So from any day where it may be that I'm working on a particular deal, which will mean that, I may be doing financial modeling, I may be checking in with the companies, doing reference calls. Once we've invested in a company, then it's a matter of, what are the needs of the company? And that can change at any given time. So, as a venture capitalist, beyond the money that we provide and participation in board meetings, we tend to try and help wherever possible, really. And so one day you could be helping with recruitment, another day you could be helping devise a fundraising strategy, or you could even just be helping with their sales strategy. It really does vary as to what the company's needs are. And as I mentioned, that does change as a company grows and progresses. And so that's, for me, what I really love about the job, that no day is the same as any other. But yeah, it's a very varied role. I spend my days doing a wide range of tasks, from looking at deals to sourcing new deals, as well as spending time with portfolio companies. And I would say majority of my time is actually spent with portfolio companies. But again,
thank you. That was, sorry, go ahead.
No, again, it does vary by venture capital firms as well. Some larger firms have their roles segmented to particular focuses. So some individuals may focus solely on deal sourcing, some individuals may focus particularly on that post-investment activity, board participation, and so on.
Thank you. Yeah, it's evident that there's a lot of different variety of tasks that you might do on a day-to-day. There isn't really a typical day unless you work in a very specialized role. So Shauna, so for yourself, how would a day in your life compare currently at Bain Capital compared to your past at BCG? There might be some glaring obvious differences in terms of travel and stuff like that, but give us an insight into how they differ.
Sure. So look, I think in consulting, it's very difficult. And of course, there's no typical day in any job, but I loved my time at BCG. So this is in no means intended to be kind of geared up as a criticism of consulting, because I loved that job and I think I learned a huge amount there. But I think some of the differences and some of the things I really like about the role in private equity is, as a consultant, you're working very closely all the time in this team of 3, 4, 5 people, and you're trying to solve a problem for a client. And the work I was doing, that was almost always the problem was, should we invest in this business or not? Is this a good business or not for a private equity client? But it could also be any number of questions for a corporate client or a government or anything else. And you kind of make your presentation and you hand it over. You feel very good about yourself. You take a weekend off. You go back and you start something else on the Monday morning. The big difference between that and my role in Bain Capital, and candidly, we're sometimes, by nature, we're asking the same questions, right? There's a reason we've got consultants in to kind of outsource some of the work. The questions are the ones we really care about. And so the questions are not necessarily always different, although that was the commercial question. And now you're also asking the financial questions, the structuring questions, the things that kind of complete the rest of the picture of the investment. The difference in private equity, and kind of one of the things I love about the job, is you really have to live your own story, right? So you don't hand it over on a Monday and then, take some days off. You really live with what you've done and the decisions you've made. And, when you decide to buy a company, you're at the board meeting the next month and you are, as Yvonne said, you're helping them with their problems. Their problems are your problems. And I think that's the big difference in private equity for me, is that it's this really, really, it's very varied, but it's a really hands-on job, and you have to, you live with your decisions and the impact that they have on people, on the companies that you work with. And it's really, you live and breathe what you're doing. I don't know if that's a very full answer, but that's kind of the visceral thing that's different to me, is the ownership.
Yeah, that's extremely useful, and also helps to kind of bring to life the fact that private equity is by nature a much more long-term areas, investment versus many other areas. And just building on your point about kind of living with your decisions and engaging with portfolio companies, could you tell us a little bit more about how you interact with management teams and the kind of work you do with management teams, and maybe through an example if you're able to give one?
Yeah, sure. So look, I think again, it does differ by firm. And so Bain Capital is a firm for whom we come from a consulting route originally, and that impacts a lot our approach to investments. And so we're very, very operationally involved. Typically, we spend a lot of time with the management of our companies. And so I guess an interesting example that's pertinent now is what happened when COVID-19 hit, because obviously for every single company, that was a huge shock, even more so for ones in the consumer market that have seen, you know, very, very rapid changes. And so to an extent, kind of late February, my job certainly changed. And I think this is a decent example of how we approach things. You always want to be out chasing new investments for sure, but ultimately you have a responsibility for the companies that are in your portfolio. And so we switched gears when that hit. I flew over before the shutdown happened. I flew over to Amsterdam, spent time on the ground with one of my portfolio companies, putting together a strategy to cope, how they were going to, oh, sorry, I'm going to mute for a second because my doorbell is going off.
We'll just wait a second.
Yeah, sorry for that. I know the dog is going to come, and like it's all going to go down. Yeah, so look, I think we work with yeah, exactly. The way we work with management teams is very much kind of hand in hand, right? So there's literally, if there's a problem, you get on a plane, you go and you sit down and you figure out how to help them fix it. I speak to the managers in normal times every week, and not just the kind of CEO, CFO, also the head of innovation, if we're working on M&A ideas, or, you know, for me at least, it's really important not just to focus on the 2 or 3 most important people, because, you know, the heart of the company is important as well, and that's where the real work gets done. So I've strayed a long way from the original question, but I think the way we work with them is very much a lot of people in a boat together trying to get something done. And that interaction goes all the way from checking in once a month in the board to, if a crisis hits, moving into the office and, you know, being another member of the team.
That's incredibly useful. Thank you, Shauna. So let's switch up to career progression. So Adiba, let's go to you first. You've had a very long career, and it's one that some might call epic. So what does career progression look like when you enter investment management? Is it a job that you do for the rest of your life? Do you switch around a lot? What do people tend to do when they enter?
I think most people, I mean, you've just heard Sheena describing the love of it. It is something that you do fall in love with. There is something to be said for being a part owner of a business, and that's the way, I guess, you are a part owner of a company, and growing that company to be successful, and eventually exiting that company. It's important not to fall too much in love with the company, because you do have to exit and return capital and profits to investors. But I would say career progression is one of experience. Career progression is linked directly to how you build your experience. And it's one of, I often look at it as more in terms of concentric circles, as compared with the more regimented way in an investment bank. You are, to become a good investor, there is no shortcut to doing a lot of it. And as you do more and more, you are given increased responsibility. So you might move from being a junior on a deal team, so that a team, when you're looking at a new deal, you'll typically have a team of anywhere between 3 and 5, depending on the complexity of the transaction, with a deal partner as a lead, and everybody's got a role, an important role, valuable role, and you will progress to becoming a deal lead. Now, most private equity firms, most private investment firms are partnerships, so your ultimate goal is to become a partner. And you do that through, and at the end of the day, these are, it is investment management, and a very important metric is determining that your investments are successful, and you determine one of those important metrics is, have you made money? And so looking at the success of your investments, both from a yield or a sort of a return perspective, but also from the multiple of money made, cash back when you eventually exit, and building your own personal deal track record is what moves you up the chain to eventually becoming a partner. That's on the investment side. But I do want to point out, I mean, we've spoken quite a lot about coming in from the ground up as an investor. Just building on some of the comments that have been made around the portfolio management side of it and the value creation side of it. I mentioned earlier that you could be an engineer, you can be somebody that's been in a Unilever or a Diageo for many years, and there's that opportunity for lateral hire as well. So because operational expertise, being able to work with management teams once that investment is within your portfolio as a private equity investor is important and draws on slightly different skill sets. So we have, as Bain Capital and many others will have, a team of folk whose their main focus is operational value creation folk who will work alongside colleagues who are doing the deals to understand, to design that sort of value creation plan post-investment that will take you to a point where eventually you're selling a much more valuable business than it was when you bought it.
Thank you. That's very, very helpful overview. And just to go into more detail, Yvonne, it'd be great. I mean, you've had a great start to your career working at Goldman and then now in venture capital. Where do you see your career going kind of 5-10 years from now? And what does the progression look like for you?
Yeah, so I think it's pretty similar within the venture capital space where, you come in as an analyst if you do come in at the entry level. And then you progress to, say, an associate, and then a principal, which is what I am now. And the natural next step to progression is the partner level. So that's a very clear path mapped out as to what progression looks like in the industry. And ultimately, you do want to get to that partner level. And I guess when it comes to the principal level where I am, a lot of that starts to become based on, track records. So what investments have you made that are, have they been successful? What's been the outcome of those investment decisions that you have made where I've led deals, for example? I guess, looking 5-10 years ahead, a lot can happen in that time. But for me, I really do love working within the industry, and I definitely see myself remaining in this industry. For me, I think that it'll just be about taking on more responsibilities. At the moment, I'm very much focused on the deal side, but as I progress in the career, I think oftentimes partners take on a lot more responsibilities when it comes to, say, fundraising, for example. So that's definitely something that most partners spend quite a lot of their time doing as well.
Thank you. Yeah, so essentially there's a lot of variety, and it allows you to have an investment management career for a very long time. It's something you can do for the rest of your life, and it's incredibly insightful in that regard. So let's go lastly to the advice, inspiration, and practical steps for some of the students on the event. So let's go starting off with Shauna. So you transitioned from consulting into private equity. Sort of going into that initial stage of when you joined, what were the most important skills that you thought were really useful that students would be really would have a great time in gaining these skills to then going into private equity. So essentially, what are the skills that people would really benefit from attaining?
It's difficult to answer because I think, look, there's two paths people take into private equity, and there are at the entry level, and there are exceptions to this, but at least in kind of large cap PE, it's fairly universal that you come from investment banking or you come from consulting, and some firms will skew more towards investment bankers if they have a very financial focus. Some firms will skew more towards consultants if they have a more operational focus. So, there's a reason that those two hiring pools make up a very large share. It's because it can be really helpful to come in with financial modeling experience and knowledge, and it can be really interesting to come in with, or helpful to come in with, kind of a consulting, analytical, commercial skill set. So those, obviously lend themselves well to the career. I think it's less a skill that, look, everything you do, you can learn on the job. And I'm kind of a believer that it's a little bit, if it's the right job for you, it's if you love it, right? Like it's going to be the right job for you if you really like people and find companies interesting, and some people love, structuring and getting the tax due diligence, like blah, blah. I don't know. That's not me personally. Some people love, spending time with management teams and founders and entrepreneurs and people who have built these amazing companies. And I could be wrong here, but I think that the skill set is such a diverse mix of things, right? Like it's part psychology, it's part quantitative, it's part commercial, it's part being really interested in the world around you. And so it's less about hard skills that you bring in, because everything that you need, you can learn on the job. Two things I think can be helpful. One is, if it is what you want to do, for sure, being a little bit realistic on the way in as to what the likely pathways are. If I was at university, would have been helpful because I didn't know. I just got lucky. And the other thing that I think can be really helpful is not thinking that everyone else is going to be much better than you. Maybe it's not a problem for everyone, but I think that some people are kind of intimidated by the industry because it's competitive to get into or difficult. And it's a little bit kind of, if you don't try, it's definitely a no. So I think worrying less about building skills and kind of taking more of a laissez-faire approach, and if it's something you want to go for, going for it would be my approach.
Thank you. That's very helpful, and I think we're now nearing the end of our panel discussion, so we'll just have a few more minutes. But in the meantime, if anyone who has any questions can submit them via the Q&A function or the chat box, that'd be great, and then we can come on to those in a few minutes. So just to wrap up, I think we've typically done this for previous GAIN events we've done, but if we could go through each of you, or three of you, one by one, and I could ask what the best piece of advice is that anyone's ever given you in terms of investment management industry and your career. So let's start with Adiba.
I'm not sure that'll be as relevant as having gone through this career. What's the advice I would give anyone looking to start? So I'll probably approach the answer from that angle. I think something Sheena said is very important, and I think this is, particularly as we think about the importance of having women come into this sector. Everybody's got something to bring to the table. And at the end of the day, in investment management or in private equity, we are taking a view on both investment opportunity and risks. And my experience is that, and I don't want to generalize or be stereotypical, but different diversity brings a differing approach to assessment and understanding of risk and strategy. And young women or women have a very valuable role to play there. So don't come in feeling intimidated or that you're not as valuable. If this is something you decide to do, and it's extremely rewarding, so I do hope people decide to do it. But if it's something you decide to do, you are equally as valuable around that table as anybody else. So speak up, have confidence in what you think or what you feel or see, and just confidence is a big part of it. Be confident.
Thank you. That's fantastic advice, and that chimes very well with what we're trying to achieve through GAIN, of trying to get more women into the industry. So thanks for that. Sheena, we'll just go to you next on the same question.
I was trying to think of some pithy piece of advice I've been given, but I think actually the best advice I've been given is more example than, it's never been put in direct words to me, but I think I work for someone who I have a ton of respect for, who is very authentic, genuine, doesn't take anything from anybody, does what she wants when she wants. And I think having someone that a role model, now it doesn't mean you want to have to be every single thing that person is, right? But if you have a role model that you really like and respect and an example to follow, I think that's, the best piece of advice in a sense has been, for me at least, having someone who kind of shows you behaviors that you think are good to emulate.
Thank you.
Could I just add to that, because I think that's a very important point. And I would take it one step further and say, if you can find a sponsor within a firm that you work with, not even beyond a mentor, somebody who is as invested and interested in your career progression as you are, that's very helpful.
Thank you both. That's great to hear. And finally, we'll finish with Yvonne on the same question.
Yeah, no, I just want to say I totally echo that. Sponsors and mentors have absolutely been invaluable throughout my career. I guess mine's more practical around the venture capital industry itself. And so, early stage investing is all about really finding the needle in the haystack. So, whether it's technology, market trends, they're constantly changing. And so learning about new industries, companies and technology is an absolute must if you want to be at the top of the game. And so research is so important if you really want to break into the industry, and whether that's books, whether that's podcasts, articles, or even interviews with venture capitalists, it will really help you improve your depth of knowledge and prove that you are passionate about the industry. So definitely try and get stuck in with as much research as possible and form your own thesis, form your own views on companies that you think are interesting, because that's very important when it comes to the interview stage.
Thank you very much, everyone. That's I hope that's given everyone a very good overview of the diversity and breadth of the sector, and I hope it's made everyone excited into all the possibilities out there. So we'll go on to Q&A. We've already received a lot of questions coming in. Jagtar, I don't know if you want to kick the Q&A off and
yeah.
Then
Yeah. So we'll keep all the questions anonymous, so you don't have to say it. We won't mention names. So this is for everyone because it relates to everyone. But we've had a question about VC and PE firms don't seem to be taking summer interns because of the time it takes to train someone up. So do you have any advice for someone that is just starting their career? What is the best route to get into investment management? Do they have to look at internships elsewhere? So any of you can answer. Well, let's start with Yvonne, actually.
Yeah, so I think that, VCs tend not to have VC internships over the summer period as other industries do. So there are a number of organizations that are trying to change that, one of them being Diversity VC. So they have recently launched a summer internship program. But otherwise, alternatively, one great thing that you could look to do is really just get stuck into the industry, build your network within the industry and think about alternative paths. So like I started in investment, in the investment banking industry before I actually went on to the VC industry. That's also another path that you may want to pursue. Some people tend to, work at a startup, for example. And again, that's another path that you may want to choose as well before you actually enter the industry. But ultimately, as I mentioned earlier, the VC industry is very network orientated. And so trying to really get stuck in, plug yourself into various communities, you may be able to find that having direct lines of communication, you'll be able to take up a off-cycle internship opportunity, for example.
Great, Sheena. I don't know if you have anything to add to that based on your experience at Bain.
Look, again, we don't have summer interns, and I think that's true a lot in the industry. What I would say is you don't need a summer internship in invest. Of course, it's great if you can get it, but you don't need it, right? There's a couple of firms that will hire out of university, but for the most part, it's a career people go into one step away from their first job out of university. And so I wouldn't worry about it too much. If you can do it, great. If you can network, great. Don't be afraid to reach out to people, because I would never have reached out to anybody. But turns out, honestly, people love talking about themselves, and they're generally speaking, if they're not too busy, they will give you a bit of time. And so don't waste people's time, but also don't be afraid if you have a really good question to ask or a good reason to want to speak to someone, to ask for a little bit of their time. And especially, I'm guessing, there's a pretty good network from Oxford University. And so that's also, I'm sure you have more opportunities than average to do that. And so make the most of it.
Yeah.
All I would add is just focus on it, go through the investment banking route or the consulting route, or you might even consider looking at a sort of a flagship private equity backed company, large corporate that has a private equity investor as its owner, and get a summer internship there.
Perfect. So we've got a question for Adiba. So do you have any advice for lawyers looking to break into the investment management industry?
Yeah, I mean, it depends. I suppose it depends at what stage in their career that they're looking to do that. I mean, I think if it's very early on, relatively early on in the career, and they've had experience on working with private equity firms, and have built up relationships with some of their clients, that might be a way in. I suppose I did it at a time that, I'm not sure how many people would do it today, but it certainly wouldn't have been possible to do it after sort of 10 years of legal practice. It was really only after a few years of being a lawyer. And I did actually, while I was working, also do a postgrad in accounting and finance. So a postgrad diploma. So it's not straightforward. I mean, I think at this stage, if you're considering graduating and becoming a lawyer with a view to going into private equity, I'm not sure that that's something I would recommend.
And building on that, slightly different question, but coming at it fresh, if you've just graduated from undergrad, and happy for any of you to take this question because you might all have different perspectives, but after graduating undergrad, what are the opportunities like for entering straight into the investment management sector?
I think it probably differs by type of investment management. I think if you're looking at I don't know because I've never looked, but I think some asset managers, stuff like BlackRock, take graduates. And so it really would if you want to work in a hedge fund, pretty hard straight out of university. Same for private equity, probably similar for VC. But if you want to go into more kind of one of the large institutional investors, that's probably more achievable.
Yeah.
Yeah, or one of the wealth management, sort of a Morgan Stanley, perhaps. Or I did talk about computer scientists before. I mean, I know hedge funds for whom the majority of their intake are computer science graduates. And I think there was a question on the Q&A there about sort of coding. Well, if you're some geek able to develop algorithms that sort of that look at sort of there is a role for you in investment management in certain firms.
Yeah. So we've got a classic student question, and it's regarding work-life balance. So I'm happy for any of you guys to answer this, but how is work-life balance in the investment management industry?
I'm happy to answer, but I'm also happy. Go ahead.
Yeah, so I think it comes in waves. So there's periods where, I'm working on the deal and I may have to work really long hours, but, I love what I do. So I don't mind doing that. But at the same time, I'm someone that does believe in balance. So I do choose to take time out, whether it's to go on holidays and travel. Obviously, you can't do that now, but whether it's, just spending time, just relaxing on weekends, I do try to take time out. But yeah, there will definitely be periods where you will find that you're extremely busy. So that's why it's important that, when you're thinking about what route you want to pursue in your career, think about entering into a career path that, you'll love to do, really.
Thank you. Thanks very much for that. We've had a question on MBAs and how important it is.
Can I say one thing on work-life balance?
Yeah,
because I don't think it's a typical student question. I actually think it's like an incredibly important question and something that everyone should take seriously and ask themselves. And for me, like, my job is not renowned for good work-life balance. And there are times when you work incredibly hard, but I think that you can go into these careers and for the most part, you make your bed and you lie in it, right? So for example, I work from home every evening. Now I work from home all the time. It's glorious. But before then, I still worked from home in the evenings if I needed to work. You can put boundaries around your life. And I think there's been a big shift in the industry and people are more accepting of different approaches and different ways to work. And it's not, it shouldn't be either you only work and that is your entire life, or you don't do a certain job. I think having a good work-life balance makes you, being healthy and sound of mind and body makes you a much better investor, because no one makes good decisions on 3 hours sleep.
Could I just add to that, because it is an incredibly important topic, and with the work that I've been doing around thinking how actors think through diversity and inclusion, it is really important, I think, in today's world to recognize that whatever one does, there will be times of intense working, either because you're building your own business, you're an entrepreneur, or you're an artist and you're sort of immersed in some production. So I think just recognizing it's really important that there is no job that that should prevent you from achieving the work-life balance on the assumption that you're prepared to work hard for something you want. I've, through my career, I'm married. I have 2 children who are children that are sort of grown up now, but I've had through my working career, and I've been able to put boundaries around when I needed to, and move to doing fundraising that requires a lot of travel, and still speak to my children. So it is very important.
It's great to hear the emphasis that all 3 of you place on that, and that it's not all as bad as it sometimes sounds. So that's great to hear. Sheena, question for you. We've had a question about MBAs and how important it is to do an MBA across different markets. So, for example, in the US, it might be perceived as more important in the UK. Given that you've recently done an MBA, it would be great if you could give some clarity on that.
Of course. Look, in the US, an MBA is a much more normal thing to do pre-private equity than it is in London. Candidly, I could have gone easily straight from BCG to the job that I do now, and that would have been seen as more of a normal route. And whilst people can leave and do an MBA, there's no, I would say, pressure to do so or encouragement to do so. That being said, I highly recommend an MBA. It's a great life experience. It's a ton of fun. Your working life is long. The year it takes you, or 2 years it takes you to do an MBA, is a drop in the ocean. And so if you can, like, who wouldn't, you know? It's great.
Yeah. So Shauna, we've got a follow-up question for yourself. So does it help to do PE projects whilst in consulting before moving into a PE firm?
Definitely. I think it's not a must have, but it helps on two fronts. One is what you do, if you think about it, there's commercial diligence, there's financial diligence, there's getting to know the management team, and there's structuring the deal. I'm sure I've missed something out there, technical diligence, whatever other diligence. The ones you really, really care about are obviously the kind of hygiene stuff around financial diligence and answering the commercial questions. And you tend to outsource to consultants a chunk of that commercial diligence. I would say, for us, we would do in-house, or at least redo in-house, the things that we think are absolutely, absolutely mission critical to the value creation of the deal. But there's a lot of other things you need to look at. And I think doing private equity projects in consulting gives you a really good insight into a chunk of what you care about as an investor. And that helps you understand, if you hate that, probably not a good career for you. And it will help you in your interviews also, because you'll have a better grasp of what people are looking at. And it'll also let you get out there and meet different private equity firms and the people who work there. And these are really small businesses. It's not quite as small as VC, but Bain Cap is a huge fund, and we have 45 people working in the deal team in London. Most have, 20 or less. And so meeting people, getting a feel for them, who they are, how they treat each other, how they treat you, I think is really important due diligence you can do before you take a big step into a new career.
Thank you very much. On a slightly different tune, we've had a question about kind of responsible investing and kind of ethical investing as well. And this is an area that we think about a lot. And we had a GAIN event actually a couple of weeks ago focused specifically on responsible investing, but we didn't cover it today. But anyway, we'll get into the detail now. I think Sheena and Yvonne, you'd both be pretty well placed to answer this question. So the question is, recently certain investing areas, particularly private equity, have come under significant public criticism. How can investors not only act responsibility, but also ensure that a message of responsibility is successfully communicated to avoid further backlash?
Yvonne, go ahead.
Yeah, and I think this is an interesting question. So I've worked with a number of private equity funds and secondary investors, and there's definitely an increase in focus on impact. So I think that the industry is definitely shifting. We're quite a long way away, but at the moment what we're seeing is the investors, the limited partners, are starting to put pressure on funds to really start thinking about ethical divestment investing. So whether that's, steering away from certain sectors, because of the potential longer term impacts on society and so on, or whether that's looking at it from the perspective of, what are funds investing in that could potentially actually harm the value of the fund in the future. And so there's definitely an increase in focus, but I think that there's definitely a long way to go in funds actually having it as a criteria when they're investing actually across the board. And I think the UK is probably a bit more advanced in that thinking around ethical investing as opposed to other markets such as the US.
Did I make a comment here?
Go on.
Yeah, because I think one needs to distinguish between investing in certain types of sectors or green bonds or whatever it is from being a responsible investor in other ways as well. And so, for us, being a responsible investor is fully integrated into our investment processes. We have a team of 5 folk who do nothing else but focus on the different aspects of being a responsible investor. And we see it that the values actually drive value. I mean, if you are focused on I mean, certainly environmental best practice and stuff. I mean, that's a given. But if you're focused on bringing down the cost of energy through renewable energy, or managing building a green building, as we have on our real estate side, the savings you make on water, on electricity, they go straight to the bottom line. And so responsible investing for us is hugely important. And what's interesting, in the markets where we invest, private equity actually doesn't have a bad name. It doesn't have the bad publicity that it might do, that it has, that it's developed in some regions where there's been a very public focus on cost cutting. Once private equity comes in, what do? They try and reduce costs by reducing size of workforce, etc. And the industry hasn't helped itself in actually describing how it builds businesses. And that's in emerging markets. It's all about growth. It's not, you're not taking it debt, relying on leverage to generate returns. You're actually relying on growth. So it does vary. The reputation it has varies from market to market, but being a responsible investor and being focused on impact on community, etc., is critical.
Yeah, that's really interesting. So we've got a question, and feel free for any of you guys to answer this. It's about, so the question is that private equity tends to hold their investments longer than other sort of areas within that sphere. But do you think businesses could be better served if the investments were held for longer than, let's say, 3 to 5 years, which is like an average sort of time held for the investment? Do you think from the business's perspective that it might be better served if the investments were held for longer?
I think you have to answer that on a case-by-case basis. I mean, the private equity is patient capital. It has a responsibility when it's looking at investments to ensure that it can actually have maximum positive impact within a time frame that's dictated by the structure of the funds. Because at the end of the day, the funds, the capital that goes in, are owned by, if you've got pension funds in there, the beneficiaries of those pension funds need that capital and profit returned to them, or the foundation for whatever work it's doing on its other side. So it's you have to, it's important to match the type of investment with the type of capital that's going in. And if it is a business that would require, much longer than the sort of anywhere between 3 and 7 years, quite frankly, that you have typically within a 10-year fund to invest and then exit, then it's not the sort of investment that private equity fund should be making.
What I would add to that is, I think, look, there's the 3 to 5 years is typical, but it doesn't have to be 3 to 5 years. I mean, we have a business that we've held for nearly 20 years at Bain Capital, not because it's a bad business and no one wants to buy it. On the contrary, it's still, generating, carrying value that's really attractive, right? So we are happy to keep that in the portfolio. I think it's not inherently a bad thing for a business to pass in ownership. It can bring lots of fresh ideas, lots of new energy. It's the nice thing about private equity is that you have that flexibility in the structure to hold a business for 3 years, but also to hold a business for 8, 10, 15, 20 years.
Thank you. That's helpful to see it from that perspective. And yeah, 3 to 5 years is just a kind of ballpark figure, and definitely not kind of typical. Either way, it could be shorter or it could be longer. We've had a specific question for you, Adiba, which is how do you deal with the constraints around deal size in emerging markets, in Africa, for example? And why is PE activity in Africa slowing down?
So PE activity in Africa takes place at a number of different levels. I mean, our sweet spot is the sort of $50 to $150 million ticket. And there are certain sectors, we've built power generation platforms where we've invested, we don't have a challenge investing that sort of ticket. Similarly, Pan-African businesses, we're building an education platform, tertiary education platform. We've invested in Pan-African mobile phones, real estate, shopping malls, retail, commercial real estate, a data center platform that we're just starting. So it depends which sector you're investing in. But there are firms that invest at the SME level as well. And there's some very attractive opportunities. And VC has taken off quite significantly just in the last sort of, I would say 18 to 24 months in Africa. So we haven't had a challenge from deal size perspective. In terms of deal flow, deal activity slowing down, I think that that is not within this current situation unique to Africa in the COVID situation. I think on the all the other sort of challenges aside, I think on the plus side for Africa, when you look at it sort of medium to longer term, is that you have demographically a young population and a need for basic goods and services and growth in businesses providing these goods and services that far outstrips growth in similar sectors in Europe or the US. So, private equity is at an earlier stage in Africa. So when you look out, hopefully beyond the current COVID and coronavirus situation, there will certainly be the need for, and I think sustained, continued deal activity for a while.
Thank you, Adiba, for the insights into PE in Africa. So we've got a question for you, Yvonne. So how did looking at companies as an investor influence you to set up your own company?
Yeah, sure. So CapitOx focuses on underrepresented founders, and I guess just delving a bit deeper into what I mean by underrepresented founders. If you look at the venture capital ecosystem over the last 10 years, well over $500 million of capital has gone into various startups, and various data suggests that less than 5% of that has gone into female founders, and less than 1% of that has gone to say Black founders, for example. And so when we speak about underrepresented, we're really talking about individuals and founders that are not typically represented in venture capital portfolios, and that's the gap that we're really trying to fill. So we've been really fortunate over the last 15 months since we started operating, investing in over 12 companies, and that's one of the core criteria that we look for, the demographics of the team and how we could look to diversify the team as well.
Thanks very much for that. We've had a couple of questions on age and whether it matters if you try and enter the industry later in your career. Well, not later in your career, but when you're slightly older than coming out of university, so late 20s or early 30s, and also whether it makes it difficult after a number of years to enter the PE space from consulting. So Sheena and Adiba, you might be in a good position to answer those age-related questions.
I mean, look, I think late 20s, early 30s it's less about how old you are and more about kind of what level of experience you bring. What I would say is in BainCap last year, we had people join. One guy was 24, done a couple of years at BCG, come straight over. Another in his early 30s, and he was a principal in New York BCG, and he decided that he wanted to make a change in his career. And so he said, okay, I'll take a couple of steps back, but it's what I want to do long term. So it's possible, and I don't think it's necessarily a problem. But what I would say is, of course, if it's something you want to do, timing it right is helpful, because if you only need to do 2 years or 3 years and you do 6, it's great, but you're not going to go in at a more senior level in all likelihood, because ultimately it's an apprenticeship job. There's no substitute for time and miles that you put in and investing experience. And so additional time, say in consulting, is not going to substitute for that on the ground. In most cases, obviously there's, I'm sure, exceptions.
Yeah, I think that's right. I mean, I think obviously what I would call that a sort of a mid level, where you're neither coming in as a senior lateral hire who's bringing, as I mentioned earlier, that operational experience, or in our energy funds we have some of the team are people who've been engineers building power plants for years. So you're not coming in either at that level, it's a lateral hire senior bringing operational experience, and you're not coming in at the typical start of your apprenticeship. So there will be significant scrutiny placed on what you've done in those years, running up, and because it's a people business as well, how able you are, how flexible, adaptable you are in being part of a team, and starting at a slightly later stage. So it's not impossible, but if it were one of an option, that people are looking at, I would encourage you not to think that it was as straightforward as one of the other entry points.
Thank you, Adiba. So we've got a question for you, Shauna. It's about internal mobility. So what does internal mobility look like at BCG and at Bain Cap? Can you easily relocate from London to another city such as New York? Is that something that's feasible?
So this is a big disadvantage of private equity, for me at least, because at BCG I really loved that opportunity to go and work in different places. In consulting, it's a huge selling point of the job, right? It's incredibly mobile. You want to go and work in the Johannesburg office for a year, if you're considered good enough, they will make it happen. Same with New York or any other place. It's not automatic, but if you have good enough standing in the team and they want to keep you happy, they will make that work. In Bain Cap, and I think it's true across most private equity firms, it's really a marathon business, and it's an apprenticeship, and it's finding people who back your career. It's building relationships with advisors, with founders, with companies, and there's a real cost to moving. It's not impossible, but there's a cost to it. And so there have been examples of people who've done 6-month secondments to another office, or have gone and worked at a portfolio company for a year in another country. It's not impossible, but it comes at a much higher cost, and it's a much less kind of normal course of business move to make than it is in consulting, where almost everybody takes advantage of the global mobility. Make the most of it before you move would be my advice.
We approach it slightly differently, because the emphasis is placed on the sectors and the sector expertise through which we invest. So it enables you to be slightly more mobile. You're certainly working on transactions that are across emerging markets, rather than, even if you're based in Johannesburg, you might be working on a transaction in Sao Paulo alongside folk on the ground there as well.
Thank you. That's very helpful from both of you. Another question about PE investing, which is, how does it differ between emerging markets and developed markets? So in terms of, I guess, what you spend your time on and what the focus is on. I don't know who's best placed to answer that, possibly Sheena or Adiba.
Adiba, go ahead. I'm sure you're best placed for this one.
Well, I haven't been an investor in developed markets, but obviously from my observations and also discussion with investors, we have many investors in common. the key difference is there are many. The key difference in approach I touched on earlier is really is looking, when you're looking at how you're going to make money on an investment, it is less about looking at sort of financial engineering or structuring or how much debt you can bring into the business, because you can, private equity in developed markets classically is the leveraged buyout, and that's not what it is in the emerging markets. Debt is in many places, and again, I don't want to generalize across markets, but financial institutions aren't set up in many of our markets in the same way to provide long-term debt. And secondly, the companies, because of the rates at which they're growing, really can't afford to be servicing debt in the same way. All the capital goes into the growth. So that's one of the key differences. I think, universally across the board, you're backing a management team. This is a people's business. You get to know the management team, and they're essential to your investment decision. In many of our markets, we don't have the luxury of having a deep pool of talent management expertise to draw on, and so we are, more often than not, we are bringing people on board. And we are extremely focused in diligence on where gaps might lie in the team. We tend to hold our investments slightly longer than in developed markets, and we tend to have in certain sectors, I would say it's more of a roller coaster ride in terms of, we've all been hit by this pandemic, global pandemic, but there's always something happening in our markets. And so, and that's the excitement of it. The impact you see in the economies of the businesses we invest in, it's just when you ride out that journey, it's just incredible.
Thank you for the insights. So we've got a question about how coronavirus has impacted private equity and investment management in general. So what's been the focus given the pandemic? Is it protecting portfolio companies, or is it looking for new deals because company valuations are becoming very attractive? What's the focus on? And it's open to all.
So I guess from my perspective in the venture capital ecosystem, it's definitely not business as usual. So in terms of deal activity, that's dropped by approximately 30% from, comparing it to, I guess, Q4 last year, or even the same period in 2019. So there's definitely more of a focus on existing portfolio companies. I'm finding that we're spending a lot more time with portfolio companies, whether that's helping them with their strategy. Across the board, a lot of companies now are looking at cost-cutting measures, trying to preserve capital, because it is a difficult fundraising environment within the VC ecosystem. That being said, venture capitalists are in the business of deploying capital, and so investments are continuing to be made. However, the bar is being set higher, so there's a real focus on, recession-proof companies and companies that can really demonstrate how they can benefit from an infusion of capital as opposed to just surviving.
Thank you very much, Yvonne. And on that note, I think we will wrap up, because we've been going for nearly an hour and a half now. So, we could continue talking about these topics for a long time, but I just wanted to say a huge thanks, firstly, to all three of you panelists for sharing your views on the investment management industry and why it's been such an interesting career path for you. So thank you very much for that. And then I also wanted to thank all of our listeners as well, and I hope that you found it as useful as I did, and as insightful as well. So in terms of going forward, well, we have a number of talks lined up over the coming weeks from GAIN's perspective. So the next talk is on the 21st of May, which is in 2 days' time, and a full schedule is available on our website, which is gainuk.org, and on our social media channels. And I would particularly encourage all of you to follow us on Instagram at Girls Are Investors, where we share regular updates on events and inspiration and work resources on a rolling basis. So thank you very much. I'll hand over to Jagtar now, but thank you very much for dialing in today, and hope it was useful.
Yeah, from CapitOx's perspective, again, thank you to the three panelists and Giovanni for helping out with the event. It's been a really well attended event, and I'm happy that we've gained a lot of insights. In terms of people that may be now thinking, oh, okay, investment management might be a career option for myself. How do I enter it? Do I need to go into investment banking? Well, we have some more events planned regarding getting into investment banking and finance in general. So stay tuned for that and follow us on Facebook as you probably are already, and sign up to our newsletter. But again, just thank you to all the events, and please make sure to reach out to our committee if you've got any questions about recruiting for 2022 grads in particular.
Thank you very much, everyone.
Thank you.
Thank you, everybody.
Thank you.
Thanks, guys.
Thanks. Bye.
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 Good luck.